Ladies and gentlemen, good day and welcome to Marathon Nextgen Q2 FY2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kanav Khanna from EY. Thank you, and over to you, Mr. Khanna.
Thanks, Nirav. Good noon to all the participants on the call, and thank you for joining the Q2 and H1 FY26 earnings call of Marathon Nextgen Realty Limited. Please note that we have mailed out the results to everyone, and you can also see this on our website, and it's also been uploaded on the stock exchanges. In case you have not received the same, you can write to us. We'll be happy to send it over. Now, before we proceed to the call, let me remind you that the discussions may contain some forward-looking statements and may involve known and unknown risks, uncertainties, and factors. It must be viewed in conjunction with our business that could cause the future result, performance, or its achievement to differ significantly from what we have expressed or implied. To take us through the results for the quarter and answer to all our questions, we have the management of Marathon Nextgen Realty Limited, represented by Mr. Chetan Shah, Chairman and Managing Director, Mr. Mayur Shah, Vice Chairman, Mr. Kaivalya Shah, Director, and Mr. Samir Shah, Director. We'll be starting the call with a brief overview for the quarter and the half year gone past, and then we can follow it up with question and answers. And with this being said, I'll transfer the call to the management. Over to you, sir.
Thank you. Good afternoon, everyone. We are pleased to share the second quarter and first half year of financial year 26 that has been among the strongest periods for the company. During Q2, we delivered our highest ever quarterly profit after tax of rupees 67 crore, a growth of 35% year on year, supported by steady execution and strong operating discipline. This performance highlights the strength of our portfolio and the operational efficiencies we have systematically built across our projects. Friends, operationally, we achieved steady progress across our portfolio with healthy sales velocity, strong collections, and notable milestones such as the occupation certificate for Neo Square in Bhandup and the part occupation certificate for Monte South Tower B. These developments reinforce our commitment to timely deliver and commitment to our customers' trust. The first half of the year has also been encouraging, with H1 FY26 profit after tax at 128 crore, the highest ever for the company, representing a 47% year-on-year increase. The momentum across our ongoing projects, combined with disciplined cost management and healthy mix of residential and commercial contribution, has enabled us to deliver consistent profitability. Now for the business updates and new project announcements. Across our portfolio, friends, operational execution progressed very well throughout the quarter. Baikala, Monte South project, we received the part occupation certificate for Tower B, a significant milestone for the project. Construction progress on Tower C continues at a healthy pace. Additionally, we announced Monte South Commercial, a large-scale Grade A office and retail development at Baikala, being developed in joint venture with Adani Realty. The project will offer approximately 7.5 lakh square feet of premium commercial space with an estimated GDV of rupees 3,400 crore, marking a significant expansion in our presence in the South Mumbai commercial market. Strategically positioned within the Monte South campus, where we have more than 1,800 high net worth family going to be residing when the campus gets completed, and this is our market. It is designed to provide a modern, integrated walk-to-work environment and will be important addition to our commercial portfolio. Friends, coming to Panvel, Marathon Next Zone, we announced the launch of Phase 3 of Marathon Next Zone in Panvel, titled the Nirvana Collection, spread across approximately 3 acres with 4.9 lakh square feet of RERA carpet area and an estimated GDV of more than 600 crore. The phase introduces 4 premium towers along with curated retail and a 70,000 square feet amenity zone, elevating Nextgen's position as one of the Panvel's most sought after integrated townships. Coming to our another project in Bhandup, Neo Home portfolio, we recently launched 2.2 lakh square feet of residential space under the Neo Homes portfolio in Bhandup, amounting to GDV of rupees 370 crore. This strengthens our position in the micro market and supports the ongoing momentum in the location. Considering this Lower Parel project of Marathon Future X, sales momentum remain healthy and sales realizations are getting stronger. We also witnessed expansion requirements from some of the existing tenants within the building itself, and demonstrating the strength of the asset and the continued preference for well-located Grade A commercial spaces. Marathon Millennium, Mulund, the project continued to maintain strong sales momentum through the quarter, supported by healthy and end-user demand and the micro market's established connectivity. The well-designed product offering and sustained buyer interest contributed to consistent absorption levels. Friends, our operating performance for Q2 and first half year 1 FY26 reflects steady progress across our portfolio. During the quarter, we achieved area sales of 65,845 square feet, representing an 18% year-on-year increase. This was supported by healthy demand across our key micro markets and consistent traction in our ongoing projects. Booking value for the quarter stood at 166 crore, which is up 29% year-on-year, driven by strong response from residential as well as commercial offerings. Collections remained stable at 191 crore for the quarter, reflecting disciplined execution and the continued confidence of our customers. For the first half of FY26, the company recorded area sales of 143,600 square feet, an increase of 12% year-on-year. Booking value for H1 reached 349 crore, growing 22% year-on-year, while collections rose 430 crore, up 17% year-on-year. Our balance sheet continues to remain strong. We maintained a net debt-free position during the period, supported by healthy collections and measured capital allocations. With a robust launch pipeline and consistent progress across ongoing developments, we remain well positioned to deliver sustained growth in the periods ahead. Friends, home buyers these days are increasingly gravitating towards transparent, financially disciplined and execution-focused developers, resulting in a growing market share for organized players like Marathon. We have a robust and proven business model, a healthy balance sheet, and a substantial land bank of over 400 acres across high-potential micro markets like Panvel, Dombivli, and Bhandup. Our strong execution capabilities, backed by in-house design, engineering, and construction expertise, continue to be a key differentiator. We also have a diversified and well-paced launch pipeline, which will be an important growth driver over the next few years. Our vision is simple and clear: monetize these land parcels in rapid way in the next few years, to come through self-development, strategic partnership, that is JV and JDA, making use of government policies for maximizing margins and creating value for shareholders. In addition to developing our existing land parcels, we are actively evaluating new project opportunities. Supported by the capital raised through the recent QIP of 900 crore, this positions us well to participate in redevelopment, joint development, and other asset-light opportunities across Mumbai, enabling faster ceiling and portfolio expansion. The progress we have made this year reinforces our conviction in our long-term strategy, supported by strong fundamentals, a disciplined approach, a clear growth visibility. Marathon Nextgen is well placed to leverage upcoming opportunities and continue creating long-term value. We thank all our stakeholders for their continued trust and support. Friends, we will now open the floor for questions. Thank you very much.
Thank you very much. Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Mihir Desai from Desai Investments. Please go ahead.
Thank you. So on the operations side, I had few questions. So if we see our area sold has grown by say roughly 15 to 20%, and bookings have also grown by 25-30%. So could you share which projects contributed most of this growth?
Yes. So the major project that contribute. Hello.
Yes, you're audible.
Yeah, the major projects that contributed are actually FutureX. We are seeing phenomenal growth in terms of demand in terms of FutureX sales. In fact, within the building also, our existing Grade A clients are demanding for more area. So FutureX as a commercial asset is doing superbly well, and along with it, Monte South and Nextgen are supporting the sales growth as well. These are the top three projects that are contributing in terms of booking growth.
Okay. So follow up on this, like for the collections, for this quarter the collections are flattish. So what have been? So are you taking any steps to increase? So or how do you see the collections in say next second half of this FY26?
So collection is a factor of percentage completion in terms of that milestone of that specific building. So as and when the progress of the project happens, and which is happening rapidly, especially in Monte South, if you look at it, Tower B we have topped out in terms of 65 floors in terms of RCC. Tower C is also growing rapidly. Nextgen, in fact, H1 we achieved occupation certificate for 2 or 3 towers, and Neo Square also we received occupation certificate. So these are the factors that actually increase the collection, and next quarter also we will see some good construction progress happening. So yes, collection will be going strong.
Okay. And so on the inventory position, can you please share what is the unsold inventory, and how do you expect the trend by this year end?
So from inventory position in the listed company right now in FutureX, we have very ready to move in almost 30,000 square feet, and in ready to move in Monte South we have around 1 lakh square feet. Other than that, there is hardly any ready to move in Bhandup, a little bit there. All in all, ready to move in inventory is around 340 crores worth. And that, because it's a ready building, the demand is high for ready to move in building units. So we will be selling that on super fast pace.
Okay. So one question on new launches or the upcoming projects. As I see the trend, say most of the players in the market in MMR, basically MMR region, are largely going towards premium housing. Where if I see the portfolio of yours, I guess the upcoming projects, if I see our portfolio, the portfolio contains more of the affordable housing. So I just wanted to understand your strategy behind this, and are there any plans to launch premium and luxury housing? So I just wanted to understand your strategy towards this.
So we have basically our portfolio
is spread across premium and affordable housing. But premium project is already ongoing. Monte South, we have a substantial plan coming in. So we do not really need to acquire anything in the premium space immediately. And projects in the next zone is also now going into a little bit of a premium category in that local micro market. So the launches which are happening are as the land bank which are available with us, and our product portfolio is quite mixed in premium and affordable.
Okay. And sir, what is the particular trend which you are seeing in the premium housing? Like, is the demand strong and we'll be able to sell whatever we construct?
So we have, basically in the premium, what we are talking is between 3.5 to 7 crore kind of a market in the South Mumbai. But the super premium, like, beyond 10 crores and 50 crore, we have seen little bit of a slowdown from the market data. But particularly this 3.5 to 7 crore market is still going strong.
Okay. And sir, are there any plans to come under the annuity or build any annuity portfolio under our commercial space?
No, as of now, we are kind of not into that space. Even though we do a leasing to the corporate clients and MNC, at appropriate time, that investment portfolio we go ahead and sell.
Okay. Okay. So lastly, are there any new land aggregation which you are seeing?
Yeah, definitely. We are going, quite looking for a JDA JV model, particularly in redevelopment model, redevelopment type of a project in central and South Mumbai and central suburbs, where project has been already started by somebody and we can quickly take over from our QIP funds. That is our top priority, where the revenue can start coming very quickly. That is our top priority. And second is definitely South Mumbai premium segment redevelopment projects.
Okay. And lastly, sir, on the macro front, do you see any slowdown in the industry, or this is a temporary?
We actually, in our micro market, we have not seen slowdown. It's a steady and ongoing thing. And the Mumbai MMR region, the way the infrastructure development push has been given by the state government, we see really big real estate play still there in the MMR region, and particularly outskirts, Panvel 3.0 is something which has been announced by the state government. So, and the bullet train stations and all those infrastructure, metros, everything is, getting, the vision of the state government is that any point to any point in 45 minutes will really give a very big boost to real estate in all the micro markets which we are working on.
Correct, sir. This gives a strong indication of the demand, sir.
Yes.
Sure, sir. If I have any further questions, I'll join the queue. Thank you and best of luck, sir.
Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Kinsisha Sharma, individual investor. Please go ahead.
Yeah, hi. Good afternoon. Am I audible?
Yes, you are.
Yeah, thank you for the opportunity. I just had a couple of questions from the sense of overall business demand and a little bit of a macro environment. Just wanted to understand how do you see the macroeconomic environment influencing real estate demand, particularly in the second half of FY26?
So I can talk about mainly Bombay and the way infrastructure is growing and the way the government has actually planned out the city, and that influencing the real estate market. Mainly, if you look at all the three government bodies, the SRA, the MMRDA, and the MADA, and even BMC, they have been given challenges of making sure the city infrastructure is dramatically improved. Right now, recently, Mr. Mukherjee of MMRDA actually took up the challenge of reaching from one point of the city to another point of the city in 59 minutes. That's the challenge that he has taken up in the city of Mumbai. That essentially means the whole Bombay north to south is going to be connected via either Western Freeway or the Eastern Freeway, and east-west connections are getting made via JVLR, SCLR, and Thane, Borivali, and Mulund GMLR. And Panvel, if you look at it, Asal Setu is connecting it, and Panvel, the new airport, has been made. So all these connections within the city actually is changing the city dramatically. New suburbs are being created where real estate prices are increasing. For example, in Bhandup, the GMLR is the superb project that is happening, and that is connecting Mulund to Goregaon, and that is where Marathon is well positioned in Bhandup with 130 acres. Similarly, Panvel, if you look at it, we have around 205 acres. That's where the airport is already in fact, soft launch of the airport just happened. Turns out the whole city center is going to shift because of the way Panvel infrastructure is happening. The train, the Panvel to Karjat train, train tracks are getting expanded. The Bombay-Delhi corridor is actually ending at JNPT, which is again in Panvel. So that in terms of infrastructure boost is actually boosting where our project locations are. Talking about Dombivli, the new BKC is getting made there because there's a bullet train station that is coming in there. So there's one bullet train station in BKC and one in Dombivli. So all these locations, because of the infrastructure, there's a dramatic change in terms of real estate story. I hope that answers.
Just to add to that, the new bullet station near Dombivli, our portfolio of land, group portfolio of more than 80 acres is very much within that zone.
Right. Okay. So that's very helpful and very, very detailed. If I could just from here move on to the overall demand and momentum and how it's shaping up. Basically, both in the residential and commercial segment, primarily post the GST rate cut. If you could just give some color on that.
Yeah. So basically, a GST rate cut is not really coming to any real estate. It is mainly the consumers that have been driven, particularly that market. However, the demand in Mumbai is really remaining buoyant. Typically, as we told you that infrastructures are improving and people are moving more inward from the particular what we are seeing Bhandup and those locations. We are seeing people coming from beyond Kalyan, beyond Karjat. All those people are finding convenient to move, affordable to move into these locations. So typically Mumbai city was not actually having more demand coming in earlier, but because of these infra projects which are coming up, within the Mumbai city limit is also the demand is increasing across the segment, affordable and luxury and premium.
Okay.
The demand for office, so as you can see in our portfolio, there's very little inventory left in most of our office projects, Millennium and Future. And what we are witnessing is while the demand remains strong, we are able to even get a higher rate, every year, whether it's in terms of any rental we have done or in terms of what we have sold. So while demand is remaining intact for sure, we are also able to get a much higher rate than we were getting before. And that clearly shows that, the overall environment remains robust.
Okay. So this is helpful. If I can probably just squeeze in another question, if that's okay. If you have any visibility or outlook on buyer sentiment and pricing trends across your key micro markets, that could be a little helpful.
Sure. So just to give you a perspective from a calendar year perspective between 2004 and 2025, 2024 and 2025, in Panvel project, we've seen an escalation of almost 5-6% in price. It's been a combination of some of our buildings getting ready as well, and there is a lot of activity and a lot of positive sentiment around the infrastructure story in Panvel. And we've seen similar or probably a little percentage or two more increment in terms of pricing in future exits.
So thank you, sir. I think this is helpful. I will come back to the question queue in case I have any more doubts. Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from Nana Varun, individual investor. Please go ahead.
Hello.
Hi.
Yeah.
Go ahead.
Can you throw some light on how do you plan to monetize the land bank that we have, given the huge amount of development that is coming into that area? Like, Panvel is touted as Mumbai 2.0, and Dombivli and Bhandup are getting significant connecting projects. So what is the management's plan to monetize it, and how quickly you plan to monetize it?
We have large land banks in all these three areas. The idea, so currently what is happening in Bhandup specifically, if I start, we have 130 acres, one end touching the Mulund side and one end touching the Kanjurmarg side. We have started new park from the Kanjurmarg side and from the Mulund side and Neo Valley from the Kanjurmarg side. We're doing self-development as much as we can do. The other strategy is actually doing B2B sales, in the sense that in case there is another developer requiring some FSI, there is a government policy where we can actually sell the FSI to another builder. So that is B2B sales. And we can also employ a strategic partnership with any developer who's a large scale developer, wherein we can do all the groundwork because we have the expertise to clear the slum, and we can partner with those kind of developers as well. Talking about Panvel, the location, as you mentioned, is Mumbai 3.0. Infrastructure is amazing. We intend to start with plotting, and then as and when the opportune time comes, we also intend to do large scale township, because the land size is almost 205 acres. Similarly, in Dombivli, we already have our expertise in terms of we have executed Next Town and Next World project. So we understand the market. We know how sales are going on. So, and with the government push, we feel that the market is going to boom, and that's why we intend to do self-development of large township there.
Thank you.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from line of Jignesh from Jiva Capital. Please go ahead.
Yeah. So I wanted to understand regarding your Bhandup project, how do you envisage in coming 3 years, how many projects you will do, and how far is the site from the LBS road? Because the proposed 90 feet road, I believe it will take few years to come.
Yeah. So it's in terms of distance from LBS, it's under 200 meters. And in terms of the 90 feet road, in Mulund, the 90 feet road has already started developing. It is going through multiple real estate projects. It has reached the GMLR already, and the first part of it has already been started developing. And if you look at Google Maps also, you will see a massive cycling track also coming through from Bhandup, and it is. So all these government projects are actually happening. The difficulty over here is to demolish the slum that is on the way, and that is where we intend to work with the authority, the Slum Rehabilitation Authority. The SRA has come up with a cluster plan where if a developer has more than 50 acres, they come up with specific incentives, and that helps the SRA department to become to make Mumbai slum free, as well as it assists us in terms of our land bank because we have a large land bank. So it's a win-win situation for government as well as us, and we will create the infrastructure within Bhandup. That is what we intend to do.
Okay. And sir, the forest issues that a lot of developers faced in the past on one side of the LBS, so that issue has gone off. So we will get FSI as we require going forward.
That is correct. So on 8th November, the Supreme Court has given a verdict wherein all these private forests have benefited. You know, the private land which was considered as private forest, that has been taken off. So a lot of new development that will take place where the revenue authorities had put in private forests as in their own names. However, the environment clearance is still required if you are abutting the forest. Yeah, Samir, you wanted to add?
No, that's it. I think all points are covered.
Yeah. So, sir, coming to the question, for next 3 years, how much we see any potential from this Bhandup project?
So Bhandup project, we have already announced today morning that we are going to we are launching 370 crores worth GDV project. The area is 2.2 lakh square feet. Going forward, our focus is going to be on Neo Valley and Neo Park. Neo Park is a 6.5 acre land wherein we have decent balance potential, and Neo Valley also is a 14.4 acre land. We have a decent potential left. All in all, it's a 15 lakh carpet area which is balanced, and a GDV of 2,000 plus crore which is balanced from both these lands together.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask the question. Participants, you may press star and 1 to ask the question. Anyone who wishes to ask the question may press star and 1. As there are no further questions, I'll now hand the conference over to Mr. Chetan Shah for closing comments.
Thank you everybody for participating in our conference call. As we mentioned, the future is very bright. We having good land bank in 3 micro markets. All 3 micro markets, we have been in the top 3 or top 5 sellers. So from perspective of acceptance of the product is already established. So all these things added with government's infrastructure push is going to have a great impact on not only Mumbai real estate market, but also majorly on Marathon's land bank. Thank you very much for participating.
Thank you very much. On behalf of Marathon Nextgen, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.